If you are already worried about the housing trade because of, say, rising rates, the CEO of RH is signaling there may be even more pain ahead. Gary Friedman telling investors on last night's earnings call, we've experienced softening demand in the first quarter that coincided with Russia's invasion of Ukraine in late February and the market volatility that followed. Friedman at one point compared the macro picture to the collapse of Bear Stearns, suggesting we still don't understand how big an impact inflation and supply chains are going to have. He said predicting right now is as hard to predict as it was back in 2008. These are words that investors do not want to hear, Karen. So I think the question is this sort of a canary in the coal mine, or are they just kitchen sinking, giving the most conservative sandbag kind of guide?
That is a great question, because the first part of the call was sort of this soaring rhetoric about what RH can be and, you know, scaling, taste doesn't scale, or you have to scale taste, or whatever they're saying is, and about all the things they're doing, the RH jet and the RH yacht and the RH architecture firm, the RH housing. They're talking about having RH houses that they build and furnish. So those two things are slightly, not slightly, very much in opposition to one another. All that having been said, though, it's interesting to me, just like a Zoom or a DocuSign, RH is close to, not quite, but close to entirely losing all of their pandemic stock boom and now bust. And the valuation is actually starting to get interesting to me. You try to, you know, invoke the 3-day rule, so we're only at day one, and I'm not very good at the rules, so I don't know if it goes down tomorrow, I might look to start buying there. I don't know that the end of RH is in sight. Maybe they could scale back some of the their ambitions, but I think that clearly higher rates are going to be hard for the housing trade. But I don't necessarily think it's the end for RH at all. We haven't seen a valuation like this in 2 years.
I mean, the higher rates, the supply chain aspect, and we talked about the cost of ocean shipping has doubled and then went up just recently again. And so that's going up. So the costs are going up. And then there's that pull forward effect too, Bonawyn, that a lot of these other stocks had seen, like the DocuSign that Karen had referenced. I mean, if you bought a bureau and a floor lamp, you're not going to buy another one. Tim's not going to buy another one anytime soon. He bought it already.
Well, he's got a lot of clothes, and those sweaters need space. You know, Karen makes a great point in terms of the pull forward, and I think there is a large part of that there, and there's no argument there. I'm in lockstep with her. I will say, as far as the consumer is concerned, I would argue that the consumer that they appeal to probably has the most disposable income vis-a-vis, say, a Home Depot or Target or Lowe's or any other type of, I guess Target doesn't really belong there, but any other type of general home improvement type of center. So I think, yeah, those headwinds are going to be there for everyone. The inflation story, if they were trying to scare investors, I think they did a good job, which makes me think maybe they are kind of kitchen sinking it. I will probably stick to Karen's 3-day rule and wait and see how this thing trades and see if it kind of starts to find a technical level. But I think the thing that they have going for them is that they do appeal to that higher end consumer, which is going to have more disposable income, favorable loan terms, things of that nature. And so the interest rate story doesn't hit them one for one the same way it would hit someone else.
All right, well, while the home trade suffers, it appears that investors are buying in bulk. Take a look at Costco, the stock hitting an all-time high dating back to its 1985 IPO. Jeff, I know you've got bulk toilet paper and everything under the sun in your home. I just have a feeling.
Stocked up, the basement's stocked. Listen, it's a simple story for me here. It's a breakout candidate, like you said. It's a great business. It's just way too expensive. 42 times seems a little ridiculous for this stock at this point. I think the average multiple is something like 26 times, but I can't pay that kind of multiple for Costco's margin profile, growth profile. So great company, buy it on pullbacks, but too expensive for me here.
It is amazing that its forward PE is higher than Apple or Netflix, Tim.
Yeah, it is, and I do think while some of the core parts of their business are places where food inflation and goods inflation and staples inflation is actually good for them. It's very good for Walmart too, and I just like that story better. I look at the chart and I say around 575, you're either breaking out here or I think you're breaking down, and the valuation is significant. So I've been wrong on Walmart in that the stock has not outperformed. It's drastically underperformed Target, wickedly underperformed Costco, and I think it's time. I just think their e-commerce initiatives, I think what they've been able to do during COVID and where they have figured out curbside, but more importantly, they're starting to get past food and some of these staples items, and I just think the valuation is very compelling.
I mean, they have got the membership revenue, which they could probably increase in price, right, just like an Amazon. And then if things cost more, Karen, don't you want to save by buying in bulk?
Well, if you ask my husband, you always want to buy in bulk no matter what all the time. And I think the pandemic's taught people, all right, it's okay to buy in bulk. It's an extraordinary company. I've been hung up on the multiple, too. They're great. Their labor costs are high and their labor force is really good. And that's sort of an interesting lesson maybe for some other retailers. But it's just been too expensive for me. I do like Target. I do like Walmart. Walmart also getting near, not quite, the high. And it's 21 times, but Target at 14, 15 times, I like a lot.